And let me move on swiftly now to our last panel for the second day, which is going to be moderated by Mike Scott. So let me briefly introduce Mike. Mike is a business and environment writer. He's a contributor actually to many leading outlets like Financial Times, Forbes, Guardian, Reuters, and Bloomberg. And he has won the Contribution to Climate Change Journalism Award at the 2021 Sustainability Media Awards. So, Mike, we're delighted to have you and your panelists with us. The screen is now yours. Thank you very much.
Thank you, George. So I will introduce the panelists for this roundtable. First of all, we have Antonis Sagris, the head of Group Corporate Development and ESG at Piraeus Financial Holdings, a more than 25-year veteran of the financial industry with the last 10 years in senior management positions. We have Teresa Messari, the Chief Financial Officer and Chief Operations Officer for Prodea Investments, one of the leading real estate investors in Greece. And again, she's been active in the field for more than 20 years. And finally, we have Yannis Stefanou, the head of energy sector at Grant Thornton, Greece, who has multiple years of experience in the energy sector and has worked with many major European institutions, multilateral development corporations and organizations, including the European Investment Bank and the EBRD. So I will start with you, Mr. Sagris. And we'll look at the ESG sector in Greece and how it compares to other markets. Is the market well developed in Greece? How does it compare with other European markets, for example?
Thank you, Mike. Hello to my co-panelists. It's a pleasure being here. Looking forward to a very constructive discussion and exchange of views. Coming to your question, just taking a couple steps back, Greek companies have already survived a decade of economic turmoil and followed by a global pandemic. So they have weathered the storms and evolved and become more resilient. What we have seen that during these challenging times, many businesses have innovated to survive, which has supported their growth ambitions. In spite of this, geopolitical tensions and conflicts affects lives on a daily basis, but it also impacts corporate strategies and how they are shaped. Greece has positioned itself as an investment hub with an upbeat investor expectations forecast. This has been marked increased appetite for Greece assets, especially in the manufacturing services, significant investment and interest for pharmaceuticals, food beverage, financial my sector, and insurance business, and lately in startups. We've seen that activity and transactions have been picking up since 2020, and a total amount of 16 billion of these type of transactions. Further, the vitality of capital markets is critical, returning to an environment of sustainability, economic growth. Effective capital markets are imperative to the efficient allocation of credit and investment, but also Greek companies are that are able to deploy capital effectively. Moving forward, these markets are going to have a role to play, increasingly important, in providing finance in Greece's most innovative companies, as well as generating investment returns needed to support Greece on its sustainable journey. The EU Recovery Fund is going to play a key role to this. A combination of these funds and along with the EU and national other funds who are approximately 40% of the country's GDP. and will be available for the Greek economy over the next 5 to 7 years. This would also crowd in some investments from the private sector. So, it's a good startup, and Greece has already received the first tranches, let's say, of the RRF. Is expected to get the second tranche in the summer. But the most important is that in the pipeline of the resilience of the resilient plan of Greece's Greece 2.0, there are 150 about projects, new projects, which is quite important and shows the interest. Among those projects, the decarbonization, energy transformation, green and digital economy can play a role and become the new reality. Energy and infrastructure are the largest, let's say, net recipient of these type of funds, and will enable Greece to achieve its near-term targets that kind of correspond of about a little bit exceed 7 gigawatts of new renewable energy sources. So just to summarize and coming to your question, and answering it, of course, yes, the investment sector in Greece is well structured and developed. It has an ESG mandate, and this is expected to have a greater impact because it's from the startup point that we're coming from. So it's going to have a greater impact in the economy.
Thank you very much for that. And how do you see the role of banks such as yours in helping to implement this ESG agenda and to distribute the funds that are needed?
Yeah. Oh, well, Mike, banks around the world do have a role to play. Piraeus provides finance and advice to help Greek business adapt to new sustainable agenda, which should help boost their competitiveness and reduce their operating costs and enter to new innovative markets. However, we see some challenges there because mainly in attracting mature and sound investment plans while continuing to provide, day-to-day support to Greek businesses. Achieving this greener, more sustainable future will require advanced risk assessments, which is also important to complement this effort in this recovery. Piraeus has contributed to numerous risk assessments, which are becoming a standard practice across Europe and the sector, focusing on the financial resilience, but also evaluating financial and social issues and matters as well. Furthermore, the banking sector in Greece possesses a long experience in managing European funds and channeling these funds to various sectors of the economy. Piraeus Bank has supported sectors like the renewable energy sources, energy saving, responsible agriculture, playing a leading role in the sustainable development of the Greek economy. We're the leading finance provider in renewable energy sources with a current credit exposure of amounting to 2.5 billion and financing close to 2 gigawatts of finance energy. Our total new loan generation just this past year exceeded 6.5. So we announced even our targets for 2022-2025 that are monthly close to new loan production close to 27 billion. So I think we do have a role to play.
Unmute myself, apologies. So you mentioned that infrastructure and energy are two of the key areas that are going to receive these funds. So I'll turn to our experts in these areas now. I'll start with you, Teresa. I understand that the sort of technical aspects of ESG are something that's fairly new for your company. So what's been your experience of integrating those issues into the way that you do business?
Right. So we have always been sort of applying ESG, but not in a very formal way. So we were looking into green buildings to the extent that they were available in Greece, because I have to highlight that it's only recently that more green buildings are being produced. We were in fact the first one to acquire the largest green office building in Athens back in 2013. But what is new to us is the fact that we have to put everything into a framework of policies and procedures and metrics. So we have always had the green aspect in our investment policy. We had social sensitivities because we established a CSR program back in 2016 called Structures of Responsibility, and since then we have been trying to use our experience in infrastructure to help those in need in various aspects of the society. And of course, being a listed company with international investors, we were very transparent in the way we applied corporate governance. But what we realized is that all these have to come down to metrics, and they have to come down to reporting. And this is what's new to our company, being more outward oriented and sharing what we do, the quality of our business with the investment community. In order to do that, we have to work with our tenants. Greece is fairly new to this. The tenants are not obliged to gather data or to provide data to the landlords. And therefore, what we have found out is that when it comes to metrics, it's rather difficult to gather it and to report it. So it takes a lot of education with the counterparties, with the tenants in our case, in order to be able to gather the data and in a form that can be used and reported. We also had to develop a lot of policies. So these were all things that we were doing, but they had to be written down in a specific way, taking into account a number of European directives and legislation. So in order to do that, you end up needing advisors. So it's an expensive exercise, and you need people to maintain that internally as well. So you have to hire the right talent to do it. So you need to build an infrastructure that can support this. And then, of course, your investors need to know what you are doing. So you need to introduce the relevant reporting. And to that end, we are adjusting. We are preparing to apply for the GRESB benchmarking to start reporting according to the EPRA sustainability framework, and to also provide the sustainability report for the entire company starting this year, later this year.
And have you found, beyond introducing all of these sort of policies and documents, has it changed the way that you do business at all, the focus on ESG?
I think this was driven not just by regulatory framework, but also the way the market is going in our area, at least. So one of the sectors that we specialize is offices. And right now it's basically the way to go to have green buildings. So ESG or not, there was no other option for us. Because there is no product, we work with developers, or we ourselves try to source this product and create it. So slowly, but definitely surely, we have to become quasi-developers. So to create the product ourselves if we cannot find it out there. And we also see that this is what the tenants request now. They are more educated. In the past, we had to try and explain to tenants why they would have to pay a slightly higher rent, for example, per square meter. Now they understand the benefits and they actively seek buildings with these characteristics, these features, because they understand that in the end, they will have significant savings, and it's also better for their employees as well. And what we see is that international organizations who come to Greece have specific requirements. They will not look at any other type of buildings.
Okay, so you said that you're having to sort of move into the development side of things, and is that mostly developing new buildings, or are you buying older buildings and retrofitting them?
Both actually, and refurbishing older buildings is actually a very exciting and very ESG exercise, if I may say so, because you can regenerate whole neighborhood, whole cities, urban areas. For example, together with Demand and EBRD, we took an old building in Ammonia Square, a very central area in Athens, and an area that was neglected for many years. Not a first choice, one might say. So we took the old building that housed the courts of Athens for many years and turned this into the first hotel in Greece to receive a LEED certification. By doing so, we added life into an area that was, let's say, problematic. In the same neighborhood, we have a listed building that is it used to have a bank branch, which meant that in the evenings it was closed and dark. When the bank left, we turned this area into 2 retail units. By doing so, we created life there, and we created light and circulation. So we understood that by regenerating the buildings in certain areas, you offer to society. So it's not just having green buildings, so the E part of it, but you can contribute to society as well through the work that you do in your own area. And for us, it was refurbishing and regenerating. And actually, I think if you can give sustainable features to a building, to an existing building, it helps with the whole ESG concept, because you don't waste what's there. You don't waste the structure and start digging from scratch and have an energy footprint from removing even the soil, which again has has some metrics. You use what is there and you make it better.
Great, thank you very much for that. I'll turn to you now, Yanis. So the energy sector is at the heart of obviously the E of ESG. What are the key risks to the energy sector in Greece at the moment? What does it are its main challenges?
First of all, thank you, Mike, and I would like to share my pleasure for being among such esteemed colleagues. Well, as I assume that we all read the news. So Greece, like the entire Europe, as you know, is largely dependent on Russian oil and gas. So we're all suffering from soaring and volatile gas and electricity prices. By the way, I would like to mention that Greece has one of the most expensive day-ahead electricity markets in Europe. Indicatively, during the previous week, I think that Greece was the second most expensive electricity market in Europe, with an average price of approximately 220 euros per megawatt hour. So apart from the high gas prices, which are a self-proven fact, this is due to certain distortions in the design of the electricity market, with the most important being the lack of large-scale conclusion of corporate PPAs between RES and consumers. Currently, we are expecting a difficult winter, and we believe that as analysts, that prices will remain at high levels. This is also validated by the fact that forward contracts that are currently signed in the TTF, in the Dutch gas exchange, are concluded at approximately 80 to 90 euros per megawatt hour. So we should also not forget that Greece does not have a storage facility. At the same time, we share the opinion with other experts in Greece that it will not face security of supply risks. The level of preparedness is, in cases of major disruptions in gas supply, is quite high. We have the Revithousa, the LNG terminal, and DESFA is currently deploying a second tank. So we should be fine as a country in that respect. However, in this volatile and challenging environment, it has become clear that Greece should further promote diversity in its energy mix, increase the penetration of renewables, and promote energy efficiency, with the ultimate objective to decrease the utilization of oil and gas in the overall consumption patterns. The risks that I see with this ambitious policy shift, which is very correctly promoted by the European Commission, is that what we are trying to establish here and what we're trying to achieve is a policy shift which is very ambitious, and we have to make critical decisions in a very short time window. So all this process should be done in a structured and organized manner. Moreover, we should ensure that from a policy and planning perspective, needs which are prerequisite to accommodate large amount of renewables are in place. And as we all know, the deployment of electricity and gas grids, it's a very long-lasting and ongoing process, as well as the capacity of the Greek administration to license a large number of renewables is also something we should pay attention to. And a general remark related to the Repower EU is that we should not forget that we are designing policies in a very volatile environment, and we should always take into account the supply chains and potential disruptions, the cost of materials. And as we work very closely as a company with investors, we see every day and we realize every day that the costs are increasing from day to day. Nevertheless, and I would like to point out that large corporations in Greece are very well familiar with preparing and structuring investments. But what is asked from the private sector is something that is quite ambitious. And finally, and if you ask me, it's the most important challenge and risk that I see is the sufficiency of the public governance and our institutions to deliver green and agile regulatory frameworks, despite the bold progress which has been achieved so far. If I could share a very small example from our involvement in the development of the offshore regulatory framework, we were mandated by EBRD to design this framework. So we took into account spatial considerations, energy planning considerations, grid planning. This is a very complex process and very complex exercise to resolve. A lot of consultations have to take place between different institutions. So all this should be properly taken into account within the time planning of policy making and policy preparation.
Thank you very much for that. So you've all, just before I go on, by the way, I should say that if anyone listening wants to ask questions of our panelists, you can do so via the Eventora platform. So please do get your questions in there. You've all said that ESG is an imperative, and but there are opportunities here as well. How big do you think the opportunity is for your particular sector? And I'll sort of go in reverse now. So I'll start with you, Yanis. So how big is the opportunity for the energy sector, and what are the key things that it needs to invest in?
I mean, at this point, I think we should focus around the Repower EU program and the recovery and resilience plans. I mean, we read every day some new announcement from the Commission, so we are all trying to catch up with the developments. First of all, we need to understand that the context in which we are operating. There is a new situation due to the war in Ukraine, and all these programs and financing instruments, they bring changes to what the Commission had originally planned, which is the Fit for 55, and they introduce new elements. What Repower EU is doing is it's a plan to rapidly decrease the dependence on Russian gas and at the same time accelerate the pace of the green energy transition. So this new plan changes drastically the energy mix and reduces the use of natural gas in all sectors, so that the natural gas at some point will stop being a transitional fuel. So this is one target. Other targets that the European policy is aiming to is the integration of variable renewable energy sources. Of course, taking into account the tools we have, such as electricity storage, like hydroelectric and batteries, and of course, green hydrogen. Also, green transition with respect to heating should also take into account other technologies which are not very commonly and widespread used in Greece, such as heat pumps. Also, hydrogen is a very, active word and technology. I believe that blue hydrogen in the midterm is the way to go. However, the ultimate effort should be placed on green hydrogen. In total, renewables and energy efficiency are the only ways to reduce natural gas from the energy mix and tackle the crisis we are facing. With renewables, what we can achieve is to simultaneously reduce energy prices and, of course, our energy dependency, and increase the economic benefits for the economy, for the promotion of investments and employment. Repower EU will bring much earlier, will lead to the achievement of goals much earlier than those that were set under the Fit for 55 plan. So it promotes technologies such as photovoltaics, the injection of biomethane and hydrogen in our networks. Of course, all investments that are associated with the promotion of those renewable gases. Energy efficiency should play a key role in this process. Storage, of course, is a technology that should be further promoted and supported. Electromobility. Personally, I also believe in the promotion of green hydrogen in transport, especially for certain categories of vehicles. So, Repower EU and the recovery and resilience plans are tools that give a huge opportunity to accelerate investments and further promote the green transition. If I could give a very rough number, approximately 12 billion are channeled for green investments, both including both grants and loans, which is approximately 40% of the total support that Greece has received in the context of the recovery plan. So this is a huge opportunity for the country. Benefits could be enormous. We should all speed up, and we should all be alert to facilitate all this investment. Finally, final remark is that both ESG and taxonomy should be gradually incorporated into the public policy making, into the way that public expenditure programs are structured, and the way that programs are designed.
Okay, thank you very much. And Teresa, obviously there's a lot of crossover with buildings and some of the things that Yanis has just talked about, especially energy efficiency. What are the key areas for the real estate sector to look at, and the opportunities to make the sector greener?
So first of all, as I said, for us at least, I can only speak for my company, it is an opportunity to enhance our leading position in more traditional sectors such as offices, because we have a portfolio with a product that is now very much in demand, and we're also in a position to create more of that product and attract the best-in-class tenants because of that product. It's an opportunity for us to upgrade existing buildings, either through new acquisitions or by working with our tenants and see how we can work together and achieve agreements to reduce their energy costs, but also improve the quality of our buildings. It's also a chance to become more creative. For example, a new initiative we are working on at the moment is how to use the logistics that we have in place, take advantage of the flat surfaces, install solar panels, and provide cheap or free energy solutions to the tenants. And it's also an opportunity to expand to new sectors such as residential, where you can provide, again, a new product that's more sustainable and therefore cheaper from a perspective of energy consumption, which of course now is very much more in demand than it used to be before. People are becoming more aware of how they need to save even in the day-to-day life at home. It's also an opportunity to get easier financing, because the lenders realize that once you have such a product, you will have a tenant or you will have a buyer. So they, even if you don't have, let's say, a lease agreement when you start developing, or if you examine an acquisition of a ready building that's not already leased, the lenders know that this is an investment opportunity that will be easily let, and therefore you have better access to financing. In fact, we saw that last year we issued a green bond, the first one to be used in real estate investment. And at first, we were thinking maybe we'd go for a smaller transaction, let's say 200 million. But once we started working, we saw that there was a lot of interest. So we ended up doing a 300 million green bond in Greece, which is, you know, for the size of the market, it's quite remarkable. It's the size that you would see in a Eurobond, for example.
Okay, thank you for that. So, Antonios, we ended on green bonds there. This clearly is a key opportunity for organisations like yours. Is ESG providing the opportunity for you to move into new areas and to come up with new products that, you know, for sectors such as real estate, energy, and elsewhere?
Exactly, Mike. You know, as Teresa mentioned and Yanis a little bit earlier, there are opportunities, and if our customers and our borrowers see these type of opportunities and would like to invest, that's where the bank comes and facilitates and supports these initiatives. There is a bigger outreach. We mentioned the issuance. Teresa mentioned the green bond. The same holds for a bank. There's a bigger investor outreach. The market is there. And, you know, it seems that a lot of funds and a lot of investors are looking a little bit more seriously products with a green flag, with an ESG flag. It's also important for companies in Greece. We just this year, we actually launched a sustainability linked loan product facility, which seems to be getting good acceptance from the market. We signed the first agreements. We're seeing an interest from smaller segments, SME segments. The incentives are there for hand-in-hand journey, let's say, to more sustainable development. But it seems that the opportunities are there. Large improvements are needed also in the energy efficiency of industries, buildings and homes, as we mentioned, transportation. Yanis mentioned a little bit earlier. This will require some critical investments in technology across all industry. Every sector might have their own pace, but they're influencing each other. So, they have an impact the way you operate. It is important. It's a one-time opportunity, let's say, for Greece, because we mentioned a little bit early on that some type of investments are required to do this change. And Greece's situation, Greece's case, if we zoom into it, latest estimates say about 400 to 500 billion of clean tech investments are required up to 2050. That's a huge number, let's say, for the Greek economy, for its structure. But it's everybody has to contribute. But there are partnerships that should be also facilitated in this way to transition. For banks, there's another dimension as well, which is related to the risk part of those investments. So more assessing risks of those type of investments, understanding those plans, understanding this new technology, and having a process in place in order to assess these risks and integrate them into an overall risk management is also important for the financial industry.
If I may add, Mike, I think it's also a great opportunity for society, because when we started our CSR program 7 years ago, not many companies talked about it. Huge organizations, yes, but smaller companies, no. And we were trying to find how we can help. And we thought, okay, we're real estate, what can we do? We didn't want to just give money. And now more and more companies, because of ESG, are more sensitive to giving back. And you realize that you don't have to give hundreds of thousands of euros. You can make a difference even with 10,000. There's always someone or a group of people who can use even a small amount, or you can do something by using your own business and improve their day-to-day life. So I think this opportunity is not just about improving the business, but there's also an opportunity for companies to be more socially sensitive and for social groups to benefit. And it doesn't have to be something huge. It can be something small as well.
Great, thank you for that. I'll just come back to you, Antonius. We've talked about green bonds. There's a perception among some of the people attending that the yield is lower than other bonds, and that therefore pension funds and ultimately pensioners are going to lose out in terms of their returns. Is that true? Is there a price to pay for investing in green bonds, or are they actually becoming very popular?
Well, there is a growing market. There is a growing interest. We have, besides the investment funds, the pure investment funds, we have pension funds, we have sovereign funds, we have university funds that want to put their resources and their money to more sustainable type of investment. So there is such a demand for such products. Now, for the Greece's case, that Greece is not an investment grade. There's no greenium attached to Greek securities, let's say, at this point. Eventually there will be. What's the benefit for Greek companies issuing such type of securities? I think you have a bigger outreach because there's a lot more interest and a bigger investor outreach. So there's a lot more dialogue, let's say, and interaction with these type of investors as well. It's an opportunity of getting your securities to a broader population, let's say, a better distribution at this point. It requires a dialogue. It requires some transparency where the money is heading, constant reporting and disclosure, and having responsible, let's say, and honest dialogue and exchange with your these type of investors.
And a similar question to you, Teresa. There's a suggestion that improving the environmental performance of existing infrastructure and buildings is expensive, and that the cost of that will be huge, and may lead to costs for the taxpayer, perhaps. Is that a correct perception, or is this an opportunity to actually improve the performance, both environmental and financial, of existing structures?
I think it's the latter. I think that the benefits by far outperform any costs. We have seen it with all our tenants. So I think it's a one-way street, really. I understand that once you're not educated enough, you might be worried about the costs, but in fact, you will get it back in savings in the future, and also you upgrade your product. Older buildings will have their own market, but it will be a more limited market as we go forward.
Okay, thank you. And Yanis, what about in energy? Again, there's this perception that renewable energy is more expensive than fossil fuels, and obviously it's newer, and people are not so aware of it. Is it still the case that renewable technologies are more expensive, or are there savings to be had there as well?
Thanks, Mike. I would say that, from a technological and economic perspective, we are far beyond that point. It has been concretely and scientifically proven that renewables are not only much cheaper than conventional fossil fuels, but moreover, they offer considerable benefits in terms of security of supply and decrease of import dependency. There are a few challenges, of course, associated with renewables, with the most important being the integration of renewables in the electricity grids and all the associated issues related to deployment of electricity grids. However, this issue has been perfectly resolved. Nevertheless, we should pay the only component probably that we should pay some attention is that there are currently some investments that have been built and are operated and have been partially depreciated. So we should be somehow cautious in the short term on the amount and the sequence of investments that are being made. But in totality, I would say that renewables are the only socially fair, environmentally friendly, and sound from an economic perspective way to decrease energy system costs and to decrease import dependence.
Thank you very much for that. And on that last point, or part of that last point, you talked about the social fairness of this. Inevitably, with ESG, a lot of the focus is on the environmental aspects, but how important are the social and governance aspects of energy policy in Greece?
Well, important from which perspective? From the public policy making?
Yes, I think for the policy making, for bringing the public with you, in introducing these things. How important is it that citizens are seen to benefit from what is happening in the energy sector?
Well, I would say that, my reply, I would structure it around two basic pillars. First of all, large-scale renewable energy projects have been facing some opposition by certain part of local societies. To some extent, it is understandable that if we deploy large-scale power plants in very limited area, this is something that needs to be carefully and thoroughly discussed with the local communities. By the way, there are very brave benefits for local communities that accommodate in their vicinity renewable energy plants. So we should be transparent, and we should be inclusive, and we should discuss with the local societies. Also, in order to increase the promotion and the social acceptability of renewables, we should engage people, and we should involve them, and we should promote the element of democracy. Eventually, renewables and other clean technologies such as hydrogen will become decentralized. That is my personal opinion. We will pass through a phase that we have large-scale plants, which are, of course, should be promoted. But eventually, and as technologies evolve, we will reach decentralization. This will allow new and more innovative concepts such as prosumers and citizens to be more actively engaged into this process. So all this energy transition process is not something that can be achieved only by large industrial players and conglomerates and governments. It has to include the society and citizens so that it is successful.
Great, thank you very much for that. And we have a question for you, Antonios. Greek banks face limited demand for loans. Imposing ESG constraints will decrease this demand even more. Is this something that Greek banks want, given their declaration that they will help to boost the Greek economy?
Well, I don't quite share the same view. We see some, we're coming from a prolonged crisis and various challenges. Credit demand is picking up. We've seen healthy demand from all sectors across the Greek economy. New disbursements are quite picking up. So, this has kind of facilitated the flow of funds in various investment projects. Looking at ESG is not something new in loan origination process for banking, for Greek bank. The environmental social management system has been placed for some time these past years. So they're looking at the environmental aspect of it. They're looking at the social aspect. This reassures, let's say, that the project is going to have a good lifetime and a good flow of a good cash flow and reimbursing their obligations. So there are matters that you should take account, should take in consideration. And, the more mature the risk management framework is, relying on those type of investment plans is quite important. Financing is also something important that's going to be picking up as we go ahead. The European programs, the RRF, should have a major role to play. It's not the only thing. It's mostly financing Greek sectors, financing businesses that are operating in the Greek economy. That's going to have that. We announced that we're going to be providing new loan generation close to 27 billion in the next 4 years. It's an amount of funds going to the Greek economy. There is going to be such a flow. This past year, we exceeded 6.5 billion. So I think there's a healthy credit demand at this point. A little bit subdued in the retail sector, but it should be picking up the following years.
Great, thank you. So we're coming to the end of our time, so I'll just ask a concluding question of all of you, and I'll start with you, Antonios. How do you see ESG developing in your sector over the next sort of 5 to 10 years?
Well, summing it up, I think we've seen, we've recognized, let's say, some strategic priorities in our case. Reaching net zero in our own operations, we believe in leading by example. Therefore, our climate action starts by managing our own environmental footprint, steering our portfolio towards a net zero by 2050 or even sooner. We want to make the most positive impact on climate action through our financing. Supporting and advising our clients in line with the carbon neutral economy is another aspect of our business and our industry. And lastly, I've mentioned it a couple of times, but managing climate environmental risk is the final aspect of our business.
Thank you very much. And Teresa, for the real estate sector, how will ESG make a difference over the years to come?
Well, as already mentioned, E is a one-way street. It's what the market is taking us to. It's what the demand is for. So it's a non-brainer. This is where we're going. G is for larger corporates, especially the listed ones, is mandatory. And especially with companies who have international investors, best practices are a must, and they were even before it became more, let's say, fashionable. What I have to say is that it's difficult for most of the Greek companies to apply it, though, because you need to have a lot of people working on that. And for smaller companies, it's not so easy. And sometimes also because you have these percentages of, let's say, female participation, etc., you need specialized people to do that. And it's a small market. So there's so many companies and so many people specialized in certain sectors. So it's not always easy, even if there is a will to apply what the regulations say. The S, I think, is the one that will need more work. Because it's not so tangible, and companies don't always understand the benefit and what you can get back from that. So the E is easy, it's business, people get it. G, you have to do it. The S is something that we will need to work on more, I think.
Thank you very much for that. And Yanis, in energy, what are we going to see from an ESG perspective over the next few years?
Thanks, Mike. I think that throughout this period, we have been taught a very painful and expensive lesson. I mean, the crisis in Ukraine has clearly shown that the only way is renewables, that decrease import dependence, make us sustainable. This will become a new norm. So if we could make a parallelism between the way that our energy systems will become more resilient and sustainable. This is exactly what ESG at the end of the day aims to. So all ESG and taxonomy related considerations will become the rule, and in my personal opinion, much earlier than what it has originally been anticipated. To some extent, this might create some confusion or difficulties to adapt or to catch up, especially for smaller players. Also, I see some difficulties, especially by non-energy actors, on how the energy system works and what are the implications of this energy transition shift. I think that the ability of the companies to cope with the challenges that we are facing will largely depend on their technical and human capacities. But eventually, I think it is a matter of culture and governance and policy. And I think these are the areas in which we should place our emphasis and efforts.
Great, thank you very much. So that brings us to the end of this roundtable. I'd just like to thank all our panelists and thank you all for listening.
Thank you.
George, all yours.
Thank you, Mike. Thanks a lot for running the panel so smoothly and efficiently. And many thanks to Teresa, Ioannis, and Antonios for sharing their expertise and their valuable thoughts. I think we have come to the end of the conference. I think we had 2 really exciting and stimulating days. So we heard from a set of distinguished speakers, panelists, moderators, and chairs, the very recent trends in ESG, the open questions, and the challenges. So we learned new things on ESG ratings, greenwashing, what it takes for a company to become successful in ESG terms, green banking, and the recent advances in regulation. And we have also looked at specialized sectors like energy and real estate. So let me, before we call it a day, let me once again thank our valuable sponsors. I should call them partners, because we view them as partners and we grow with them. So I would like to thank our gold sponsors, Grant Thornton, Greece, Piraeus Bank, and Prodea Investments. I would like to thank our silver sponsor, the National Bank of Greece, and our affiliate organization, the Athens Exchange Group. I would also like to thank our media partners, Athena, Euro Today, Finance Pro, NextDeal.gr, Οικονομική Επιθεώρηση, Greek Business File, and Savvy Investor. May I also thank Inventora for their valuable assistance, Hartis Company, Piraeus University, and the Department of Banking and Financial Management. And last but not least, may I also thank EBRD for the wonderful collaboration we have over the past 2 years, and in particular, Andrea Moraru, Maya Henerkes, and Olga Aristidou. And it comes without saying that I'm immensely grateful to the IFFR Marketing and Media Officer, Ms. Despina Kondopoulou. So with that, may I also thank our audience. I hope you enjoyed it. And thank you very much for interacting with us and with our esteemed group of speakers. And we're looking forward to seeing you in one of our forthcoming events again. So have a nice evening, or have a nice afternoon, or have a nice day, depending on where you reside. We enjoyed a very wide international audience. So once again, Thank you very much to all of you, and I'm looking forward to seeing you all again in the near future.